All right, welcome everyone. Welcome back to the 5ers Live Trading Room. We're back. It's Tuesday.
We
I'm back. I wasn't here yesterday, but Victor was, and we had Deanna. Very, very good episode. I was in the background listening, and that was some really, really good stuff. We're definitely going to bring her on again. And Victor, I think you did an amazing job. You're such a nice host, such a nice interviewer as well. So thank you for covering for me.
No problem, man. It was a pleasure, and I have to admit, Diana had a lot to offer to us. And I was enjoying every moment because she was giving that so much value to our audience. So I really hope we have her on more often. Uh, let's do that. But I haven't said hello to everyone yet. This is the 14th of the month. I hope we. This is. I feel excited each time we start because there's a lot to be done for the audience, right? There's a lot of people who we can help, even if it's just with simple things like how you manage your chart, how do you do your back testing, and I feel excited every time I think about all those people in the audience who, we were at some point in our career as a trader. We were at the beginnings, right? Everyone starts the ladder, climbing up the ladder, and we were at that phase where you don't know what to look for, you don't know where to learn from, and where you should focus. And that's, I think, one of the key things that we can offer the people in the audience, and that gets me excited each time we start the stream, because I think about myself when I was in that phase, and it gets me exciting. So I hope everyone is watching and hitting those like buttons, so we can continue to do this work.
Yep. So well said. On the topic of risk management, this weekend I did calculate my risk rather poorly. I made a miscalculation, so to speak. I made a misstep in my trading journey. Let's see if you can see. Let's check this out. I got a. This is what I got. Look at that. I broke my foot. Definitely bad risk management. I took my kids. I was planning this weekend trip, a beautiful, fantastic weekend trip. Had my two kids, and I said to the 14-year-old to bring a friend as well, and went to this. We had a nice hotel, and went to this trampoline park. And yeah, you could get. Guess what happened at that trampoline park? I definitely, I as the trader that I am, thinking probabilities. So I'm at the trampoline park, and I'm like looking at where I should be bouncing and thinking like, what's the probability of me landing outside the trampoline if I do this? And I said, maybe not very high chance, but I'll take that risk. I took the risk. I broke the foot, and here we are. That's why I took some time off. It took some time off yesterday. But man, goddamn, that pain was crazy. I thought, in the beginning, I thought it was just a strain on my ankle, right? And as I was laying there in like severe pain, these kids were just jumping over me.
Oh,
and I'm like, could someone help me? Is there anyone here? Like, does anyone work here? There's just kids jumping around over me all over the place. Oh, wow. It's actually what I did was I bounced on a trampoline, and then I was going to land on what I thought was like solid ground. But that part was actually not solid ground. It's like the part between the trampoline and the ground just fell straight through and twisted my ankle, and then kind of like shattered the ball on the outside of the foot. Oh man. Yep. But stop loss got hit. I took the trade, I took the risk. Now I'm here suffering the consequences. What did I do right? What did I do wrong? Well, that's the thing we have to do as traders. We have to think about what we did right, what we did wrong. What I did right was I had fun for the very short amount of time that we were actually there, because this is like the first thing that happened. And what I did wrong was going there in the first place. Yeah, wow.
It sounds very painful, Jonathan, breaking your ankle the way you did.
Yeah,
So your foot went through in between in that between the trampoline suspended area and then the
yeah.
solid section. Ooh, yeah, that sounds
Yeah, and
painful.
but it landed on something, and like everything happened so quickly, so I can't really remember exactly what happened. All I remember is like the pain was crazy, and I remember thinking that maybe it's broken, but then like after like 15, 20 minutes, the pain kind of like started getting a little bit better. So I was thinking like maybe I don't have to go to the ER, right? Let's just go to the hotel and see what happens. But I'm very lucky that I actually did go to the ER because I did not expect the foot to be actually actually broken. But yeah,
Yeah.
um,
So
it is what it is.
now we're in drawdown. We had a
We are
loss. We're in
definitely.
drawdown. How
Yeah.
do we recover?
Okay, so we got about 4 to 6 weeks of drawdown, and I guess how do you recover from drawdown? Well, uh, you need good sleep. You need mental like your mental health needs to be good. You need to be focused, have discipline, get good sleep, and manage your risk. So one example of that is it's like outside. It's just ice all over the place. It's ice. So I don't want to go outside, but I have to go outside on Thursday because I got to drop my kids off at the bus. So that's going to be a lot of risk management on Thursday. Okay, enough of me. I hope you guys had a wonderful weekend, guys, and we're here to talk about trading and not my foot.
Fractured
Even though I would love
ankle.
to, talk about that all streamed up, but we
But
can't unfortunately do that.
that for everyone in the audience, that is what happens when you put two traders talking together. They relate everything to their trading mentality or their trading mindset, and we see
Yeah.
things. The conversation, the analogies we make, they show that we are traders at heart.
Yeah, man. Everything's a calculated risk, isn't it? Like everything, like it doesn't matter if I'm traveling, I'm out on the road, whatever. I'm like everything's a calculated risk, right? And you're thinking like, what's the probability of this thing happening over this thing? I wish there were like a clearer a clearer path to find an edge in real life, because in trading it's quite simple, but in real life it's complicated. What if we could have like an edge in our real life? That's an interesting topic perhaps, but yeah.
But I think we do, right?
Yeah,
Because
we kind of do.
we improve in life.
Yeah.
Your net worth goes up. The financial part, your health is held high as possible. Your relationships, they become, you become richer in every sense, relationship wise, family wise, in time. So you kind of progress, which is the equity curve, right? Or happiness might be the equity curve. So we do have an edge on the market being reality.
Yeah, I like that. I like you said, you make money and then your relationship gets better. I like that.
By the way, the
Okay, so
Witfog, who is a regular in our Discord community,
yeah.
um, has some great advice for you, Jonathan. This is for everyone who has some kind of injury. But especially you, Jonathan. In this case, this is golden advice for pain and recovery.
Yes, so I'm trying to rest as much as possible, but really it's I'm not the type of person that I'm not gonna lay around just do nothing. I feel like it's difficult for me to really rest. So I probably should be resting a bit more. But I think it's gonna I'm gonna recover quite quickly. I think it's the pain isn't really too bad, but yeah, I could definitely be probably resting a bit more. But the thing is like when you're a trader, it's like you're running your own business. It's not like the you got to do something. You know what I mean? Like you can't just call up your boss and say like, okay, so you know what? It's like you call up the market maker and say like, you know what? Can you just do a trade for me? And I'm gonna call in sick. Could you just be making some money for me? That's not really how it works. You got to find it. But then again, you got a laptop. You can lay in bed and trade from the laptop. It's not really an issue. What is an issue though is the strong medication that they gave me, which I took yesterday, which I'm like, I'm not going to take this again because that shit is not good for trading. You're not going to be able to make a lot of good trades when you're in that fog of like, wow, dude, I was so tired. Like all I could do is just I tried walking around, like tried doing things. Like all I wanted to do was just sleep. So yeah, do not trade when you're under the influence of medication. That's a very important advice. So today I actually decided like I'm not gonna. I would rather take small doses of pain than to not be able to do anything.
But on that note, I think there's some valuable takeaways here. Um, trading under influence of any medication isn't good, right? You don't have to be a doctor to know that, right? In general, we can assume that because it's going to affect how you feel, how your mental acuity will be, acuity, I mean, and equity as well, your sharpness. But the other thing is, if you're not taking the medication, that means that you're going to be in more pain. If you're in more pain, that means that your stress level will be higher than usual, which means
Yeah.
that you're trading with stress, which is also not ideal for proper decision making process. So I think there's something there to be for everyone who might be having some health issues to be aware of that if you're physically if your body is physically in stress, and that could be pain by something that you're suffering, that could affect your trading performance as well.
Definitely. And it's the same as you have physical stress and you have mental stress. I mean, it's all gonna affect your trading bottom line. So I think it's very important to have that mindset of always being able to monitor yourself for any exaggerated emotions. Either way, it could be euphoria, could be fear, greed, negative emotions. Mostly what I talk about is different parts of stress, and then of course the positive emotions, but also physical pain, physical stress, all of that. It's all gonna affect you, because trading is it's so important to have. And you talked about that yesterday as well. Trading, it's very important to have that mental clarity and that focusing on trading psychology. And it's the same in every field where it's performance based field, which trading is. So that's definitely very very important. And I've of course taken the decision that during the the first week of recovery, so I'm going to recovery for this is going to be like 4 to 6 weeks. And I'm thinking, because the pain is today it's getting manageable, so I'm going to try to get off medications today, and then I'm not going to be trading actively much in the first week, because I know that pain makes you a little bit more tired, and also it's difficult to be focused. It's also very difficult to get into that flow state of mind where you always have something that's kind of like irritating you, or something that's just poking your attention all the time.
Yeah, that's the calmness rule, right? If you can be calm, then it's not ideal to trade. And I think with pain, you're not going to be calm, right? You're going to be constantly making the best effort to not feel the pain while or not focusing on the pain, but it's not going to be calmness. So I think your that decision is the best one you can take. Not trade or lower your risk considerably, just to compensate the fact that you're not calm. You're in somewhat pain in whatever degree that may be. Um, There's
I want to
something
talk
I
about
see. Yeah, you're showing the S&P 500, and that's very interesting. Later, I wanna show something just for the audience. Something that happened on Bitcoin. A little thing. It's a little thing, but I love watching it when it happens, and I love to show that as well to the audience. But that'll be after your S&P, and there is also a slight, a very weak recovery movement price action on EU that we could look into afterwards as well.
Okay, so I'm going to look at the S&P 500 and EU, and then I'll transition over to Bitcoin, so you could take over and look at Bitcoin. We have so this is the first time I'm looking at the markets since last week. So I'm not really updated on what's going on. We do seem like we do have the US PPI coming out in about 11 minutes, 10, 11 minutes. So that's going to be interesting to see how that moves the market. I'm not going to be I'm not going to be trading that. I'm not going to be probably trading much this week at all. But of course, I'm going to be looking at the reactions to that news and see if it changes anything. So while you were while you were talking before I started drawing some lines here on the S&P 500 just to get a sense of what's happening, I think this descending. I think this is a wedge. Isn't it? Yeah, descending wedge. It's not really of much importance to me. What is of most importance is the fact that we broke below this level right here on the S&P 500. That was a level that I looked at and said, if we break below this level and we fail to reclaim the level, then I think we might be potentially entering a bear market. Like that's the idea, right? A bear market always happens. You always see confirmation on the lower time frames than in the high time frames. So I want to look at the daily and the weekly here for the S&P 500. If we fail to reclaim this level, of course, the next level below is going to be that one. I did try a short here. I mean, a long. I did try a long trade because the thing is, the way I'm trading the S&P 500 is I'm going to be buying support. Simple as that. I'm only going to be buying, and I'm only going to be buying support, and I'm going to sell resistance. Simple. So chances were that we might have seen a bounce here. We went down. If we can reclaim this level, then I think we're going to move up to this level up here, which is right below 6K. We might test the 5.7K right here, and I will be most likely be buying that level as well. Alex is laughing in the chat. I don't know what he's laughing about, but he should definitely come on here and show his face and laugh with us and not against us or
at us.
At us. Yeah, exactly. Alex. Okay, so if we come down and test that level right there, I'm going to be buying, right? Again, but if we break below that level, yeah, we're in the danger zone, you know, of entering into a terrible bear market. So on the daily, we can kind of look at the structure of each move to the upside, and I'm going to begin from October here. So from that low right here, October 2023, and we're going to look at the behavior of each of the phases of this market. So I would say that this is that's fun. This is what he's laughing about. He's mocking my abilities as a technical analyst. That's what he's doing. And we work for the same company. We're in the same team. Remember that. We're in the same team, and this guy comes on live stream and he's mocking me. Like, he's mocking me, and I take it very, very personal. Talk to us all about that. Okay, so we had, this is the primary uptrend right here, and then we have the secondary trend, and I believe that this is probably secondary, primary, secondary, and then Alex should change his name on YouTube to Alex So Toxic. Alex. Okay, let's leave that. So what I want to look at the lows and highs, the swing highs and the swing lows. And I mean, if these lows are going to be part of the primary trend, right? If this is going to be part of the primary trend, and this is the behavior of the overall bull market, remember, I'm not going to view this as a bear market. I'm going to view the whole of this as one big bear market, right? And if we're going to look at these lows as the lows in the bear market, then can we find any difference in what we're seeing right here? Is there any difference in the characteristics of price action here compared to any other points in this move or in this cycle? And I do actually think we're seeing something which is slightly different. If you look at the lows here, you have one touch right here, and then second, third, and on the fourth touch, as a lot of times on the fourth touch you see price breakdown. And there is a quite clear difference, because there is a possibility that this is, I'm not saying that we're going to get into a bear market or anything, but I'm just trying to read price action, right? I'm not trying to predict anything here. I'm just trying to show you what I'm seeing. I was trying to ignore the chat while talking is also quite difficult. Something I have to learn. I could just mute Alex, so that would be better. Okay. This could be a range, right? We don't really have a range here. Not on the daily. I think this is just a rounded motion. So I don't really think we have a range here. But this is definitely a longer term range, I believe. We have clear touches of support with good time between the touches, and it creates a drawn out range. So there is a clear difference with what we're seeing right now in price action and what we've seen in the past with the lows. And also why this is important is because the more a level has been tested, the stronger it becomes when tested in the reverse direction. And the longer the time, the longer the level has been in play, the stronger it becomes. The first time this level was tested as support was October last year. First time SR flip, support, break support, and now resistance. This is a very strong level. That level is much stronger than, I believe, this level and that level, and maybe even this level and the level we broke down here. So the strongest the strongest resistance in this trend is the resistance level that I believe we're testing right now. So there is a chance that if this level is not reclaimed, we could be seeing something like this. And if this level is broken, we need to know what would that look like on the weekly. So we go out to the weekly, and I could definitely see this. And important also, we're currently testing the 20 EMA on the weekly. That's the level that we're holding as support, and that's also the level that most of the time is holding as support in a bull market for the S&P 500. Excuse me. So if we break this level, what does that mean? Well, I think it means that the structure is now no longer bullish. I think the structure of the market is now bearish. So losing this level is the first tick of potentially entering a bear market, and losing this level is the second tick of potentially entering a bear market. My projection of the market entering a recession or the contraction phase of the credit cycle is, it's a bit too early. I'm looking at around the midsummer or August type of thing, right? That's what I'm looking at. That's a bit too early, but the timing is impossible. It can happen now, or it can happen in 8 or 9 months. We don't know. Nobody knows. So what I'm saying is, though, is we're currently in the expansion phase of a credit cycle. We are not in the accumulation phase. We are in the expansion phase. Right when I was getting to my point, Alex shows up in the background. This is one distraction over the other. All right. So my point is, be careful. You know, we're getting close to the top of the market. If that be today or in 6 months, I don't know. But the warning signs are definitely here. Alex, how's it going, man? Welcome.
I missed
It's been a while.
I couldn't have you think I was being toxic like that. The way you said it, was just, it was hilarious, because I know how tired you are after you've hurt your leg.
Yeah.
It was that moment of you just looking at it, was like, yeah, that's falling bridge. That guy's going for a lot, man. You guys have got to be happy that Jonatan is here. He's got a broken leg, very, very on like 2 hours sleep.
Yeah, man. It's difficult to sleep when you wake up all the time and feel Like you have to adjust the foot and everything.
Yeah.
Sucks.
Well, I've just been chopped up by euro and the gold today because it's literally just been chopping everybody up. So I've lost 2 trades.
Right.
We'll wait for PM. Is it PMI coming out now, or is it PPI?
Yeah, PMI is coming out in 2 minutes. We can switch over to
PPI.
What did I say?
PMI.
Yep. Yesterday we hit our target. Yeah, we did, baby. It was a good trade. Nice trade. Yeah. Oh, crypto's killing me, man.
Dude, yeah, it's
every time I come on here, all I say is crypto's killing me.
Yeah, I gotta.
Because FTM as well, one of my biggest bags, has now turned into Sonic, and Sonic is now not even listed on any exchanges. I don't know what is going on there, but
all right.
But anyway,
they did a rebranding, did they?
Did a rebranding, but whoever was in charge of that rebranding has really messed it up.
Wow. But they haven't changed. They haven't rebranded it on the exchanges.
The exchanges have now done it, but you can't deposit, you can't do anything on there with Sonic. Sonic's just not available at the moment, so somebody's selling it.
Right.
But, yeah.
Okay, so we got S&P 500 here at the top right. We got Bitcoin here. We got gold, and we got Euro USD. So we can see what the news brings us. Oh, well, here we go.
News. Wow,
that is that's a move. That is a move. Wow, look at that.
Yeah, buddy. Yeah, buddy.
Okay.
S&P
500 is flying.
Oh my god.
What's the news on this? Okay, so it's higher than expected. No, it's lower than expected. Okay, PPI is lower than expected. PV is 0.4, consensus 0.3.
Yes.
Actual is 0.2. I'm honestly feeling so disconnected from reality that I'm not really sure. I'm not going to try to dissect, what this means for the market, but we can look at price action. We can go back to the S&P 500 chart. I just did an analysis on that, and we can go back and we can look at this and we can say, okay, it looks like if this move is the move, which a lot of times you'll see reversal after the initial move, but this time it's quite quick. It's a quite strong move.
This is a nice move. I'm happy to get into look for a long on euro. A long to euro to the 200 EMA on the 1 hour is definitely what I'm looking for, but this is a fast move. We'll just have to wait for that retest at the top of the range.
I think this is
also
this is
Bitcoin is moving bullishly on that news. Gold, all risk assets. So that's a very welcoming news for everyone holding or trading those pairs, or at least if you're bull right on those assets.
The S&P 500 is moving much stronger than Bitcoin, which makes me believe that if this is the real move, and this is there's definitely an edge in this. So if you want to create a system around this, you're welcome to do so. But if there's a very strong move on the S&P 500 and you see that the fundamentals align, that when the technicals align with the fundamentals, so you see that the economic news comes out and it should be bullish for the S&P 500, and the initial move is bullish and it continues to move in that direction, and that move in relation to Bitcoin is much stronger, then Bitcoin is lagging behind, and that's exactly what we saw here, right? So if you see that and it aligns and the S&P 500 has a very strong move without any signs of pulling back, then you want to long Bitcoin, because a lot of times Bitcoin will be lagging behind and it's going to take a couple of minutes for Bitcoin to catch up to S&P 500, because there's many more traders looking at the S&P 500. There's much more volume in that market, so it's going to be moving very quickly if a lot of people are looking at longing the S&P 500. And you also, a lot of times you also see that you have people being caught on the wrong side because it happened at resistance. So you might see people shorting that level as resistance, and then a lot of people are getting stopped out as well, which adds to the volatility of the move. If we look at the 1 minute on the S&P 500, we're actually seeing that it's holding quite strong. It's only been 3 minutes, but I think after about 30 minutes from now, we can safely try to predict what might happen in the rest of the day. So if price, of course, one way of trading the news on the S&P 500 is, of course, always to fade the initial move. Like you had a very strong move to the upside. if you see something like this on the 1 minute, you might want to fade that move with stops about here down to where the move originated from. But if you continue straight up, then this is definitely very, very strong move. So it's going to be interesting to see how this develops.
Have you been converted into trading indexes then?
Well, okay.
It sounds like you're converting.
Well, not really, but so what I've done is I've realized that. Oof. So I went through my trading journal for last year, and I've noticed that there's been a lot of stress in relation to trading, right? And I see that my performance doing active trading it has not been as good as it was before, but my performance with swing trading and position trading has been much better. So I'm kind of started transitioning into that with finding a focus on technical trades that also align with the fundamentals, which doesn't come along very often. So while waiting for those in the Forex market, I've been trading the S&P 500 on my personal account, and it's been going extremely well. I'm just buying support. It's just super simple.
Let's see what happens here, because I just got into this position. I'm happy to take another position a little bit lower, like right here, really. That's already 1%, so this could either be a really, a fake out, a fake move, and then it's just going to continue lower. And if that's the case, I'm taking a 1% loss. But I'm still looking for that 200 in EMA being hit. So when you look at it like that, it looks like I just got in at the top of the range. But when you look at the 1 minute, it definitely looks a lot better. Let's see what it does right here. This could be a really
Don't
nice.
you feel like your stop loss is a little bit too tight though? Shouldn't it be like below the range?
If it goes down there, I don't want to be in the trade anyway.
Look at the retest right there. It's retesting that level to the left, the most recent level. That's a really good retest. I think if it's going to bounce, it's definitely going to bounce here.
Yeah, if it doesn't bounce here, then
are you going to lose money?
Yeah, don't want to be in the trade.
How does that feel?
What pair is that?
Euro USD.
Okay.
Yeah, it looks.
You want to go long? You're already in the trade. Okay.
I'm already in the trade at 20.
The best type of feeling when you enter a trade, like right when you enter a trade, it goes against you and you pull it up to show everyone the nice trade that you just entered, and you're like, this looks like it's gonna hit stop loss.
Trading live is an interesting.
It's definitely
an interesting way of trading, because you put.
And I love how you pull up the chart and like, and then all of a sudden you try to find millions reasons why this is a good trade.
There's been some times where I've pulled up the chart, and then as soon as I've got in, I think there was a time the last couple of times I was on, I pulled up a chart, got into a trade, and boom, straight away to stop loss. It was like, damn. But
that's how it is.
It is what it is. It is what it is, and I wouldn't trade any different.
Yeah, you gotta have a thick skin for doing that live.
But I think we have we're definitely, I talked about in the beginning, I talked about how the initial move most of the time is not it's not the correct move, maybe not the correct move, but it's not. You will usually see a pullback or a retrace on the first initial move, and after that pullback or retrace, that's when you can start to look at how the markets are digesting the news. And on the S&P 500, I think we're seeing good levels that we might retest to the downside. We'll see. For me, I really want the S&P 500 to reclaim this level. I think it's way too early to form bearish structures here. I think it's just too early. I'm thinking. I've been saying for a long time.
Your position is at risk.
That's so no. I've got that on this.
You should put another EMA on.
Should put another EMA. Yeah, like another EMA is going to protect this position.
Looks like you need a longer
Yeah,
EMA.
do you know what? I'm gonna put
that.
the stochastics on, and that's gonna protect this
good,
position.
because that's gonna push it up. One thing that's really good in this situation is the RSI, because imagine if it's oversold. That's gonna definitely help. Yeah, so I was saying I have said for a very long time that Trump's inauguration is most likely going to be a sell the news event, where you have buy the rumor is Donald Trump being elected, and selling the news is not the news that he got elected, but the actual, him actually stepping into the White House and doing the whole inauguration thing, right? I think that's because there are some rumors flying around about him proposing a bill on day one that is supposedly going to include some Bitcoin stuff, some crypto stuff. And he's also going to propose some things that on, I believe, tariffs and it's going to be immigration and tariffs, right? So how are they going to finance everything? And they're going to finance everything through tariffs, right? And depending on how he does that, it's going to affect the market quite a lot. So it's going to be quite interesting. That might, depending on what he actually tries to put through, it's going to have severe implications for the market, and that might be the start of either a strong move to the upside or the beginning of a big move to the downside. And I think a big move to the upside is just going to prolong the time before we have a recession. But a big move to the downside, that might be the start of a recession, is what I'm thinking.
Nobody wants a recession when they've just got into office. So I think he'll probably do everything to prevent that from happening.
I've also heard a lot of
inflation seems a bit sticky in the US.
Yeah. But I think inflation might go up, of course, and we'll see how they deal with this. But there's also I've seen a lot of people talking about how if the market dumps because of tariffs, the effects of the tariffs can help recover quite quickly. So he could do something like dump the market, blame it on Biden, and have the most prosperous bull market ever for the last 3 years. So it's a lot of things can happen here. A lot of things can really happen. But we have
a strong dollar. I don't think strong dollar at the moment is not good for us anyway.
It's good for me though, because I'm getting paid in dollars, so that's great.
For your crypto though.
Yeah, it is. But I've sold most of my crypto though, so I'm.
You never. There's no. Where was the signal? You didn't tell us.
I told you
holding your bags. There's you. Do you know what, guys? This is the true Jonatan. Yeah, he comes into the group. And he says, guys, there's this meme coin. You've got to look at it. Everybody's like, you've got to buy this meme coin. Great. Everybody buys it. And then it just dumps. Turns out he didn't buy the meme coin. He just told us about the meme coin. So,
guys, play nice. Play nice.
Well, that's a private group, though. I would never do that to my actual followers. So that's
the actual people that he actually likes. He would not actually do that to. He just does it to them.
Yeah, no, but I sold most of my Bitcoin position when we hit 100K. And I'm not holding a lot of altcoins because I feel like it's just the risk is not worth it. We've had one of the most awesome bull runs in the history of crypto. Since so I feel like it's not. I feel like we're very close to the top, very close to a.
I think there's a big difference as well when you're an informed. Let's say investor, or you're more like this cycle. I feel like I'm way more informed, and the fact that I didn't do anything, even though the signs were there, makes it hurt even more. Because when I first got into crypto in the start, I was this super newbie trader. I was throwing money at everything, and it was going up. It was absolutely fantastic. Now I've been very, very specific of what I've been doing. I still ended up giving most of it back. It's crazy. So,
well, you know what? Like, you would probably have been better off if you just focused on like the daily and the weekly and just held, right?
That's what I did. But I think, Look, my Solana and my ETH are still up. It's just the recent coins like FTM that for some reason every time I've got into FTM, it hasn't made me any money, and near as well. Those ones that were up about 100% and then basically came back all the way back to break even, which is a shame, you know, because they had really good structures. But Solana, I'm still.
To be fair, I think Solana is actually a very good. Could be a very good hold. I'm going to switch over to my screen because this is what I have on. This is what I have on for Solana, and I remember doing this analysis before December. So around the time when we were actually trading up here, we were talking about how this level for Solana is a very good level. It's right inside the reload zone, and this is on a daily. And you can see how the high of this double top or double bottom didn't really come in here, but if you increase it, it's pretty much the same structure. And the timing of this is you have
what is it based on? What is the timing based on?
Okay, so the timing, this is on the timing is based on Bitcoin. This is where I believe that Bitcoin will top out. So this is the 1st of September. This is the on Bitcoin. This is the average days it takes for Bitcoin to go from the halving to the cycle top, and that's going to be right here at the 1st of September. We can go back to Bitcoin, look at the weekly. It's going to be right here. The average days to top is going to be here, which is around the end of August and September. And that aligns quite nicely with Solana. Now, looking at the structure of this, I believe that we might be ranging around here for longer. And the top, based on the structure on Solana, the top on all coins might perhaps come a little bit quicker or before top on Bitcoin comes in. But Solana, if we see a last altcoin window opening prior to that last move to the upside on Bitcoin, then Solana is a very, very good level to hold here. I think it's
Solana. I think is a very strong chart. Definitely feel, you know, even Doge is a very strong chart as well, which is quite funny. But the best advice for something like this is DCA your paycheck into an index fund. If it's with Bitcoin, you know, you've got Grayscale, you've got all of these different companies, just DCA it, you know, that's all it needs. Just a very steady investment plan. Keep trading for what it is, trading, you know, it's a little bit more risky. Keep a small amount of your cash to just trade with if that's something that you want to do. But I would say the best thing to do, you've got to get your money and put it into different pockets, you know, one for trading and then the rest for slow investing over time. And that's the way that I think anybody should do it.
Was that based on the question I pulled up?
Yes.
Yeah. I think
and for those who wonder what DCA is, that's dollar cost averaging. What Alex is actually saying, which is actually a very powerful advice, is to invest every period, that is every month, a fixed dollar amount. And you keep on doing that regardless of what the market does. If it goes up or down, you just keep doing that. And that's a very safe way to getting into the market and making sure that you have a system where your emotions and you're not trying to time the market, just, you know, catching on that wave, riding that wave, because on the macro level, you know, equities are going up not every year, but I mean, on average. And that also holds true for many assets as well as Bitcoin, right? We expect them to keep on going. So to keep on growing, I mean, so DCA, dollar cost averaging, is a great advice.
So I can tell you about what my plan, right? Because I've been planning this for a very long time. I mean, there's a reason why I'm spending like hours every day reading up on the cycles of the market, especially the credit cycle and how the markets work. When do markets go into recession? What does that look like? And then what does the market look like when it stabilizes after a recession? And everything that we're seeing right now that goes around in the world of finance, this is what the markets and the world looks like when around the top, when you enter a recession. I'm not saying it's going to happen today. I'm not saying it might not even happen this year. It might be in the beginning of next year, but we are much closer to the top than we are the bottom. So it's in my mind, it's time to make a plan. It's time to make a plan for how do you survive a recession. And the word is cash. Okay, you survive a recession by staying in cash. Unless you're if you're a day trader, then you might want to. Yeah, it doesn't really matter. Like, it doesn't really matter. You might want to flip the strategy. If you are, looking at the S&P 500, you're trading the S&P 500 on futures perhaps or something, and you're making a lot of money, and you see that most of your trades are long. Well, you're making money in the bull market. If you enter bear market, you got to switch that. You got to start looking at shorts. You got to perhaps things like that. But what I'm doing is I'm slowly but surely, like, I've sold most of my Bitcoin position. I've sold most of my altcoin position. I have stopped the dollar cost average into my long-term portfolio, my index funds, and my pension and stocks and things like that. I've stopped DCA, and I'm now going to average out. So I've instead of averaging in, I'm now averaging out of the market. And when there is a confirmed recession, like when you have an economic news confirming a recession, that's when I will start flipping the switch to DCA with small DCA until that market flips again. And what I'm doing with the dollar cost average is I'm dollar cost averaging smaller amounts when we're in a recession. And then if I see a shift in sentiment and a strong shift in market structure, I'm increasing the dollar cost average. So I want to be dollar cost averaging slower in a bear market, and I want to be increasing that dollar cost average when it's a confirmed bull market, and then try to flip that switch off and on depending on if we're on the risk off and risk on environment. And that's kind of like...
That's some awesome idea, Jonatan. Actually, we can, because the people in the audience will ask, well, what sentiment are we looking for that switch, that flip? What are we looking at? Are we looking at EMAs? Are we looking at some other sentiment indicator? And actually, what we can do is we can use statistical information. For example, what is the average, drawdown that the equity market that goes through? What is the average period that it goes through when there's a recession, for example, right? Those things are hard. They're not, subjective. Those are hard things you can use for a system. And then when you have an average, you have a range. Let's say it's a year and a half, that's the median, and you have some recessions take a little bit longer, maybe two point something years, and some are less than 1 year. What you can do is then you assume, okay, I don't know exactly when the recession will stop or the market will recover, but we have some data, historical data to base, have some assumption, informed assumption, make an educated guess. So what you can do is you start, and you don't want to time the market, you can say, okay, I'm not going to time the market based on, indicators or recession being on and off. But what I'm going to do is I'm going to use the lower end of the range that I just calculated for the average duration of a recession or a drawdown during a recession, drawdown in equities, I mean. And then you take the lowest number and you say, well, I'm going to start when it hits, let's say the range, the lowest range is from 9 months to 28 months. Right. And so you say, well, somewhere between 9 and 28, that drawdown is going to be, over. So, and I don't want to time it because I don't think, I can. But what I can say is it's going to be most likely between 9 and 28 months. So what you can say for the first 9 months, I'm not going to buy anything. And I'm starting on the 9th or around the 9th month. And I'm slowing in by way, and you can spread it out. So by the time you are at 28, you are 100 invested again, right? Because if you phased out, that means that your past cash position has grown. It's a bigger composition of your portfolio. So you can reposition in, and by the 28th month, you're fully invested again. Right. And this is based, you're not actually timing the market, although you are timing the market, but you're doing it based on data, on averages, on historical data, And this is a very great idea, Jonathan. You can, and this is the lead you're going in. What I mentioned is just going in, switching it and deciding from the 9th till the 28th month. But you can, as well as Jonathan, you can skew that the how much you go in. So by the time it's halfway through that cycle, you can be more than half or less than half in, right? If you think it's going to be a little bit more prolonged or a little bit shorter this time around, right? So you are making discretionary decisions, but only fine tuning. But the basis is very number based, hard number, which is the way I like trading.
What is you doing?
By the way, I didn't want to break the flow, guys, because I think the discussion you guys were having, although I wasn't saying much, but the discussion we were having was very interesting. So I didn't want to break the flow, but I was in the background. I was looking at a different. That's why I put on my screen, because I wanted to show.
But I kind of before we move away from that subject, I just want to comment and say that, while we were listening to you and I saw Alex was yawning, but still it's very, very important, right? So I got this idea, right? We're trading, right? We have a lot of people watching here, and they're day trading, and some of you might be in your 20s or in your 30s, right? You have a lot of time to be investing. You have a lot of time to be investing in long-term investment, in index funds or whatever. And with the power of compounding, you have the chance here to make a lot of money with very, very little work. So while you're doing the day trading and you're struggling with day trading and you think it's really, really difficult, put some of that effort, some of that money into a long-term, like a long-term savings plan or long-term position trading plan, with the advice that me and Victor you shared to you, because it's fairly simple, it's fairly easy to do, and it doesn't require a lot of times, because dollar cost averaging, you can do that automatically with different settings on your bank account or exchanges or whatever, and it Look 10 years down the line, you're going to be making a lot of money doing that. So I think it's very important that we as traders, we look at ourselves as portfolio managers of our personal economy, right? So you want to make sure that you diversify your investments, right? You're a day trader, but you're also a position trader, and you're going to be making good financial decisions in your life. It's not about being a day trader, because if you succeed as a day trader and you start making a lot of money, you got to start thinking, how do I put that money to work? Because if you used to go out and buy cars and houses and everything, you're going to find yourself, probably not a very good position if you find yourself in a drawdown in your day trading. So you want to make sure that get a good amount of capital, make that money work for you. The way that you want to make money is the money that you earn is going to come from your assets, right? You want to make money by taking out the profits on your long-term investments. If that can be your monthly salary, then you're set for life. It's like that's really what you want to be focusing on, having the money. Should we address the elephant?
I don't know why Raf is so fixated on Victor's mask. Like, bro, if this is the only reason why, you are coming onto the stream, you are on the wrong stream, my friend. Like we talk about the this stuff because it's important. I think if I could have gone back to when I was, I don't know, like 20, 21, and just didn't waste all of that time that I didn't actually do any kind of long-term investing, it's a regret of mine is not starting early enough because you're so focused on trading. You think you're going to just trade all your life and that's all it's going to be. But trading opens you up to different ways of putting your money in places, because at the end of the day, trading is just a means to an end for you to get more money. So it just opens your mind up, and just don't do the same mistake as that a lot of people do, including myself, which is not actually investing at all and thinking you can just trade to make money for the rest of your life, because it's just not.
It's a very good point.
And EU is going to pick you up.
I think the power of passive investment and passive income in the extension of the first one is huge. The value that it means to be able to have into perpetuity income without lifting any fingers once you have enough capital on your belt and you're doing it passively. If anything, people in the audience can learn or take home from us, this is so powerful, and actually that should be the ultimate goal, right? I think I will be a trader for the rest of my life because I love doing it. It's my passion. And even when there is virtually no financial incentive to be trading, I'm pretty sure I'm going to be trading because I love doing it, not because of the necessarily because of the the need to do that, but I enjoy doing it. However, you want to be in that position where you don't need to do it anymore, and that's the ultimate goal here. Yes, being a profitable trader, consistent trader, that's the goal. That's what we're aiming for. But there is a even bigger goal, which is the having enough capital to just not having that necessity to need anything else in terms of financial income.
I think I would I would love to. I mean, I would actually not be able to like trade actively for the rest of my life, but I would definitely continue to do analysis. I would definitely do research and do analysis, and maybe try to help myself in my long-term trading. But sitting here staring at the charts every day is day trading. Like, come on,
I don't think I could
no
bear
way
to
I'm
do
doing that.
This for another like 20 years. Just stare at EU on the 1 minute. Imagine you got a family.
But trading.
I'm single. I live on my own responsibility. I couldn't, sitting on a 1 minute chart.
I'm proud, man. You sound really responsible. You sound like a real adult now.
Yeah,
I have my own
trading can take.
Yeah, I do.
Be a trader can take many forms, right? You don't have to be on the 1 minute, and you don't have to do it all day, right? You can have it. I'm pretty sure that having when we are in a different phase of our lives, you will adjust to have the balance again. And that phase when you're single, the balance is different than when you're a family guy, and when you're pensioned, you're retired, you'll have a different balance, right? So the thing is to look for that balance, and that may be different for every person, different for you or now or anyone in the audience. But being a trader, I don't know, it's personal, but I would say because I enjoy doing it, I will still want to do it maybe at a different degree, a different amount of time, but it's going to be something I want to have in my life.
You're a special person though. You would definitely I could definitely see you, Victor, spend 20 more years trading EU on the 1 minute. Like, I could definitely see you doing that. And I could also see yourself, but you know what? If you do that, you're going to be making so much money that at some point you're just going to be, nah, I have enough,
The thing is, it's besides it's a means to an end, it's also a game. And I like the game.
Oh yeah.
Right, the challenge, it's a riddle to solve. Where's the edge?
I think for me, the game is.
God, what is this position doing? Can it just do something? Can it either go up or can it hit my stop loss? Like, can it just?
Oh wow, you get saved by the spreads right there. Wow.
Yeah, that's the 5ers spreads for you.
I like what you said though, Victor. Like, it's a game, and I 100% agree with you right there. Like, I think it's almost like when I was younger, I played video games, and now I'm trading. And like, not only trading, I love building things, right? The work I do for the 5ers and other things that I'm trying to build. I like that idea of looking at myself as a character in the game, and I'm trying to level up my real life, and I'm trying to build things and develop as a human and things like that. And trading is definitely part of that game. And Alex is just shaking his head in disbelief. Can get your stop.
Be nice.
Wouldn't it be just? Isn't trading nice just when it actually just
works?
playing with me, you know.
Well, yeah.
The reason why I'm on the 1 minute time frame is I need instant gratification. I need to know if I'm instantly right or wrong.
You're that honest.
Would you say that you're Alex? Are you addicted to trading?
Would I be addicted to trading? I don't think it's addicted to trading. I think I just like the challenge, and I like being right. I think that's all it is. There you go. And these are the times where I don't like being right.
I like being right. I love that. I love that.
I like the honesty. I like the frankness.
If I was smart, I would drop short right now, but maybe that's too much risk today.
Let me go back to the chart to show what I was looking for or looking at while we were talking some time ago. Well, I was looking into EU, right? Because we talked about this yesterday. This level is, to me, the pivot point. That's the point where if we're above, we're likely to be forming some kind of recovery, right? Doesn't mean we're going to change the whole trend necessarily, but we're going to have some kind of move upwards movement, a pop, maybe, go back to retest these levels or not, but it's not going to happen. Obviously, it's not going to happen if we are below, but this is the line in the sand to me. Whenever we are above, I'm going to assume that we're trying, at least attempting to form some kind of a reversal. And if I go to the H4, we don't have I like that pin bar a lot, and the fact that it's doing it right at that line and dissecting it, crossing it, makes me think that buyers are defending that line in the sand where it shows. And why that line is, you might ask, that's the order block that gets invalidated at that line. Right, so if it closes by Friday at the end of the trading session below that line, this order block gets invalidated. Everything crumbles. Not crumbles. It only goes to the next order block below on the weekly time frame. But it's a huge move down. So for a couple of days, it will be very, very weak, and it's already very weak. But we're talking about a move about 240 pips or so. So for the next weekly demand area. So that's the line in the sand. And if we go, the fact that we formed that pin bar, very beautiful, by the way. This is a bullish sign, by the way, for those who don't know. It is a bearish candle, but this pin bar is bullishness. That's buyers coming in and defending that low that got hit and creating that wick. Okay, now and we ended up, before we defended the first time around, we defended. Well, not the first one, it's the second candle, but it's in this candle we did defend that line. Now if you go to the lower time frames, to the 14 hour, to the H4, what do we see? Do we see a reversal? Do we see a quasi? No, we don't. Right, the quasi neckline is not even here. The neckline is all the way up here. Right, so there is no recovery. So that tells me on the H4 that a recovery is not happening, meaning the market is still wanting structurally, still has its way, has a easier way going, continuing going lower. If we go to the H2, same thing, although there the neckline is a bit in my opinion is here, so there is a chance that we can have that flip, that break of structure, and we could have some confirmation by the formation of that quasi that we are in a recovery, or we are in a reversal.
What's a quasi, Victor?
Okay. Yeah. All right. That's a yeah. Correct. Yeah, the quasi is a reversal pattern. It's short for Quasimodo. Quasimodo being that character in that novel of the Dame of the Quasimodo. I mean, of Notre Dame.
Notre Dame.
And
is it the Hunchback of Notre Dame? That's the one.
Hunchback, yes. So and it's in that novel, and it's because of the asymmetric shape that character has in that novel, and that's the same thing. It's an asymmetrical head and shoulder pattern, and it's a variation of the head and shoulder. It is a head and shoulder, but it's just not as beautiful. You're not looking for that. The necklines are not roughly symmetrical at the same level, and the shoulders are typically not. It doesn't look like a head and shoulder. A head and shoulder is the textbook, of course, is something like this, where you have the neckline roughly, right? It doesn't happen this on the market, this, perfectly, but roughly you have, this is called the neckline, exactly where we have the yellow line right now. And the Quasimodo can be completely different, where you have it's not asymmetrical at all, right? This doesn't look exactly like you can have something even more asymmetrical, but it's still a Quasimodo if it satisfies a couple of criteria. So that's the quasi, being it's a reversal pattern, variance of the head and shoulder, and it's, of course, because it's a reversal pattern, it tells you something about the market. It tells you how the market is structuring or forming in an attempt to reverse. Doesn't mean it's going to reverse necessarily, but a lot of the times it does have to, use one kind of reversal pattern. It can be a quasi, it can be something else, can be a V-shaped recovery, can be, double bottom. Doesn't have to be a quasi all the time, the way it reverses, but it will use some kind of reversal pattern, and quasi is one of them. Well, going back to the chart, so we do have on the daily, we did have that buyers coming in, creating that pin bar. It's not enough yet. It doesn't mean the market is going to go up from here, but it's a nice sign to begin with, and it's on the daily, so it's quite significant, right? At least to pay attention to what's happening. That if you go to the lower time frames, we didn't find any quasi on the H4, and the H1, the quasi, the neckline is up here. And why do I say neckline, right? Because in a quasi, right, we'll have something like this, right? What's important to understand when a quasi is a quasi and when it's not is the neckline. The neckline is the baseline, or this is an inverse head and shoulder, of course. It's the base of where the shoulder, the left shoulder, is between the left shoulder and the head. This indicates the quasi. If there is no, let's say we have something like this, this is not a quasi, and the reason is because it needs to take out that neckline first. If it doesn't take it out, then it's not a reversal, but it hasn't broken the structure, and that's exactly the importance of it, because everyone will be looking at this level, whether the market is able to break it or not. If it takes that previous high or swing high, it means that the market is trying. Doesn't mean it's going to happen necessarily, but it's trying to make a reversal. So that neckline becomes very, very important. And if actually it's just look at that line, and if it takes it out, if price takes it out, that means that there is enough of momentum on one side to reverse the market. Doesn't mean it's going to happen, but that is the first sign that a reversal might happen. So in the same analogy, or the same in this instance, the neckline is this blue line, and on the H2 it hasn't been taken out yet. So the reversal on the H2 isn't there, not on the H4 at all. It isn't here. The neckline is way above. So the reversal isn't exactly visible. If it's going to happen, it hasn't really shown its face yet. There is only at the level at H1, we do see that there is a let me see if I can find it. Yep, that's the neckline on the H1. So you can have, this is then the movement. Let me get it right. This is then the swings in the market, right? You have a established downtrend, lower lows, lower highs, and you break that neckline, right? That's the quasi forming, activating. And we do have that. It tells us that, the areas that, well, it doesn't tell you, it can continue anywhere. But personally, or at least my system is that I want to buy them when it's below that or beyond 50% retracement, right? It needs to retrace at least half of the move up, right? The leg from the top to the base of whatever move that comes after the top. And we haven't reached that. So there is no entry based on this reversal pattern, right? The entry would be this. And you can identify all sorts of entry order blocks, which give you a higher chance of market using that structure to reverse. But that's not the point what I'm trying to make. The point is, even though the recovery is very flimsy, we only have an H1 quasi activated. We don't have an H2. We for sure don't have anything that resembles a quasi on the H4. We do have a daily candle pin bar that looks promising, right? At least attracts attention to search further. Are there any other signs, confluence of a possible reversal? But if we go to the lower time frames and to recent price action, if we look only at this structure, right? So we don't consider the rest of the possible recovery being formed, but just this structure after the daily pin bar being formed, right? We're not saying the recovery is being formed. We're going to go much higher from here. We're only trying to get an idea if we're going to go higher or lower. That's it, right? From the current price. And if we do that, what can we find? I was looking into this while we were discussing. Let's look closer by. We do have a bullish order block on the H4, a fresh one, right? It's being created by these two candles, this one and that one. That engulfing creates that bullish entry or fresh order block. What does it do? It comes back and retests that area. And if we go for confluence, we go to the lower time frames, we find another fresh order block on the H2. You have multiple time frames telling you that this area is a great area for buyers to come into the market. It doesn't mean it's going to reverse the whole structure. The trend is going to go up from here. No, it just means that buyers are likely they have a good chance of reacting to this area. And if they do, then, the most logical expectation to have is that, for a couple of bars, we're going to have some buying pressure. The price is going to go likely higher. Now, if you have that in your back of your mind, right, the daily, the H1 recovery, the H2 that hasn't reached its neckline yet, but maybe it's going to go there, right? Those are slight indication of what the market might be have in store for us, and we then look at the recent price action on H4, H2, H1. Actually, H1 I didn't look at, but H1 is not part of this setup because the H1 doesn't is not it has already been tested. Now, what I would say is, if the market is going to defend this area, then that is the sweet spot that I want to be buying this market, because it's a fresh H4, it's a fresh H2. I want to be buying that. That is the line between those two yellow horizontal lines. That area, between those two horizontal lines, right? That area, that's where I want to be buying. And if I go to the lower time frames, to the 5, and we try to find the reversal pattern, right? Remember, the market is fractal in nature. So those quasi structures and in order blocks that we can find and spot on the daily, the weekly, and so on, they also present themselves on every time frame. And you can use the same concept to look for entries on the lower time frames as well. So if we go to the 5-minute, what do we find? We find a quasi as well. Remember, this is the area on the H4, right? This whole area, that's the bigger shaded area. And we have a smaller, more refined area, which is based on the H2, right? And so the idea is that this whole area, and specifically the smaller, tighter area, is going to be defended, right? If that's the case, right? And then let's look if we can find that quasi. What do we see? We have an established downtrend, right? Can you agree? We have lower highs, lower lows. We break the neckline and we go all the way up here, right? Price comes back. One of the thing is we have 3 order blocks in its path, which is one of the reason. We have 4, by the way, which is one of the reason it's too many for me. It doesn't mean it can't react. It can be a profitable system. Yes, it can, but I prefer to be a little bit more selective. And 4 is to me, my system is too much. But the market does continue not once but twice, and the initial reaction on EU is to the upside. That's another cue, right? Not a clue. We can use that maybe the market is going to go, a couple of bars at least to the upside from where we are right now. But where do we enter, right? Now, this, because of the quantity that I showed, this whole structure or doesn't allow me to take an entry because there are too many entry order blocks. So I need to go for more deeper, more recent to find a valid entry to get in. If only, of course, TradingView corroborates. Okay, so and if we get there, what do we find? Right, we can find another quasi. I'm going to be making it very simple, right? So we can have, that would be the quasi, established downtrend. We have the break of the neckline, and we come back. Where do we find? We find those entry order blocks right there, and that's exactly where the market is reacting to and possibly having its move up. Doesn't mean it's going to necessarily, happen, but if the market is going to reverse, then these entry order blocks on the lower time frames, these are the ones that give you the best, risk reward ratio while maintaining a decent win rate, right? You can see how the order blocks are being formed on different time frames. The market comes back into them. Well, this is the news, by the way, but it comes back to that same area. That's not coincidence. We see this in the market all the time. Let me take this out. Why does it come back to this area before it moves out? Why exactly there? It's not magic. There is an actual reason. It's because of that order block. It's because of, that's the point, the origin of that impulsive move. That's where the buyers came in.
It's not because of the order block. It's because it took me out of my position. As soon as it took me out of my position, then it went back up. Sorry, anyway, I had to just jump in.
Well, yes, I say order block, but of course, it's not because of a structure painted on a chart. It's what the order block represents, right? It's the point where the sellers lost control. It's where the buyers came in and took control, right? That's the not equilibrium, but that's the line where they get in. So if the buyers came in at that certain point in the past, even though it's a few minutes, before, they're likely to come back at that same place again, and that's exactly what happened. Now, this is exactly how I trade, using quasis and order blocks on different time frames to choose and select when I want to participate in the market. And this looks very promising for your position, Alex. I didn't know it was stopped out.
No, I got back in after we saw. I can just show the trade. I did get back in after I saw the reclaim of the 66. My original stop loss was under there, but I decided to trail it. And probably that wasn't the best idea. I should probably just leave the stop loss in where it should be, in the set and forget type of approach, because this was, even though I don't normally see this type of drawdown when I'm doing this, but I'm always supposed to leave my stop loss underneath the prior low of the particular move that I'm trying to trade. But as soon as I saw it reclaimed, I did get back in for the same position, because I still think this is in play. If I'm looking still on the 1 hour, this still is in play. The only reason I was taken out because I had a tight stop loss. But if it's still in play, then I can just get back in and trade it. It's not an issue.
I see. I like that. Yeah. So, and the next question is, if that is the reversal point, what is the FTA? What is the first trouble area, right? Any trade we get in, that should be actually, before we get into the trade, we should already have thought about where can this go, and does it offer me enough profit in comparison to the risk I'm taking. And we can look at the daily. Although daily is not the best if you're for a short move, this daily isn't the best, but there isn't on the daily time frame any structure all the way here that we could expect some selling coming in. Oh, thank you. On the 4 hour, we don't have any bearish structures except this one. So if I don't have any other information, I'm going to be set my TP in relation to that order block, because that's the first structure that comes to eye, not to say to mind, but to the eye, that the market will likely have some kind of reaction, bearish that is, to it. So I want to be, and personally, I want to be out before that reaction comes. So I want to be having my TP on the lower end of that order block, or even before that order block. So I want to be out before it even, touches it, if possible. And yeah, so in that case, if just to give everyone at home an idea.
Yeah, what's going on in gold? I love. Let's see what Portugal is saying. Portugal.
It would look something like this. Just before I, that's the structure. Those are the order blocks that I, if it goes below and close below, then that's not how the if it's going to reverse, it's not going to be doing that. So on the assumption that it's going to respect those order blocks, and that is the structure that I want to be targeting, we can see that the risk reward is 4.9. But I mean, it depends on where exactly you entered, of course, where you put your stop exactly. But it's going to be multiples of the risk you took. You can understand that you don't have to have a high win rate to win this, because you only have to, in this case, you have to be above 20% win rate, which shouldn't be too difficult for most people. Let's go to gold. But before we go to gold, Alex, yesterday we talked about remember we talked about the 200 EMA.
Ooh, I wanted to speak about this, actually. Yeah.
Yeah. You remember how it reacted? The wick went almost precise there, and it came right back down.
I want to show a really good example of it, actually, because the trade that we had yesterday, we had, I think it was this trade up to here. So we got into this position here, and we took that trade because that was the 200 EMA on the. That was the trade right there. Okay, so I did take
remember
when I was thinking, but that was the original trade. Break, retest above this range, 200 EMA. So the exact same thing happened on the 15-minute, which was a really, really, really nice trade as well, where you had that consolidation, the exact same strategy. You had that consolidation, the break above, the retest, and then the 200 EMA again for a take profit. It's a really, really, really nice trade that I missed because I wasn't even paying attention, because that's not in my trading times. But that's a really nice example right there of that strategy working. Carry on, Victor.
Yeah, that reaction we had on the 200 EMA, and I remember when you showed us, or you showed your graph, your chart, I said, let's focus on that, because I find that so beautiful, how technical, how that reaction is, because to me, that's the market telling me that 200 EMA is something the traders are watching. It is something that they are acting upon once it gets it, right? And that on the same token, I want to show you guys something on Bitcoin. Bitcoin had a very similar reaction today on actually yesterday, right? I'm not sure if I showed this yesterday. I don't even know if I showed my chart on Bitcoin yesterday, but if this weekly order block is being squeezed and retested, I ask myself, what are the structures that are below us that could stop, the wick, not the whole movement, but just the wick. And there is, of course, an order block here, but the last order block in that area is this on the daily, and you can see how nicely this went. And this is not coincidence, right? That it almost reached it, and probably is because of the spread that it didn't touch it, because the traders will be putting their position there plus spread, right? And that's why I suppose it didn't reach it. But the fact that we got so nearby, and once we got there, right, we reacted completely the opposite direction. Everything changed. The order flow changed. It was to me like something that had to be done. It had to be touched, tapped into that area, that structure. The buying pressure, everyone switches, or the market predominantly switches, and then it goes up. I think that is a very, and this is the reaction of market reacting or tapping into an order block, a D1 order block that is, but still just an order block, nothing fancy, nothing, just the reaction of that order block. So that's the reason why I use them all the time, because the market, they do react on them, and you can build a system on this.
I wonder how many people are short down there. So think about as soon as it broke down through 90, how many people got ultra? They were like, yo, this thing is just going to hell. This is short, gets bought up, and now everybody's underwater, pushing back up. But it still lacks conviction. I really think on a macro time frame, we're still in like a massive phase of,
well, the structure
looks like distribution.
Yeah, on the H4. Yeah, on the H4, I see everything through the eyes of through the lens of quantities and order blocks. On the daily time frame, we don't have a lot today. If we finish bullish here, we're at current levels, we'll be forming a new order block, which we probably will be retesting again in the near future before continuing. So I want to see that happen before I start thinking this is recovering, or this is we switched back into bullish mode, bullish order flow. But on the H4, we already have that break of that quasi that I was talking about, right? The market can go up and probably will need to come back to some structure it left behind before it continues, creating that quasi. And we have the first possible resemblance of a recovery, but it's still too young to say anything, because the daily hasn't created. Yes, there is a order block here that was defended, and it's still valid. But the way that it did it, the fact that the price needed to create that wick, makes me doubt that a little bit. But yeah, it did. We did have an order block that was respected, and we created another one, and maybe we're creating another one again on top of it. So the buying pressure is accumulating back into the market, but it's too early to say, I think.
Yeah. Do you want to go on gold? Let's have a look at see what gold's doing. I take it gold is going up, and oh no, it's not.
Well, gold is one we did look at yesterday.
Not on the weekly. Vic, can you go on to like a day trading time frame? Just want to see what it's doing on lower time frames. Okay.
To me, it well, at least through the order blocks, it's at an area where it's being sold, and it is reacting to that to those structures that were created recently.
Nice.
If I switch
go on to the 1 minute quickly. I'm sorry to be a pain. I just want to see what Portugal is doing. Ooh, lucky. Okay, looks like a double bottom. Oh,
it does look very nice on the
euro is just absolutely flying. That's beautiful.
Oh, nice! Beautiful. Look at that.
That is stunning. I wish that would have done it before I actually took out my first position. Jonatan, why are you so quiet?
My foot, man, it's kind of hurting.
Can you show your foot, or is it too far down?
Well, I can try. Let me see.
Right, don't hurt yourself, Jonatan. Don't make it worse.
I'm gonna fall over. I'm gonna break the other foot. Okay, right. I'm gonna see if I can show it. All right, here it is. Get it right here.
Oh, that's what you get, guys, for jumping on a trampoline.
Yeah, don't.
Adults are not supposed to jump on trampolines.
Yeah, dude. Like when I.
Wait, how did you do it? Sorry, Victor. I just got to understand. This is the first time we've spoken to him.
First of all, when when I was planning the trip, so we were going to the trampoline place, and then afterwards we're going to the hotels. I was packing some stuff, right? And I figured, if I'm gonna be jumping around on the trampoline, I should probably not have like jeans. So I should have something more loose, right? So I took a couple of pants with me, and they were like way too small, right? And you were not allowed. Like I had
spandex or something. No?
listen. I I had my jeans, and they're like, you're not allowed to jump in jeans for some weird reason, right? So I'm like, okay, so I gotta change, and I figured like my son, he really wanted me to jump with him, so I'm like, I gotta change. I gotta get these small pants on, right? So I'm jumping around there. I'm like these pants are like from 15 years ago, and I was way smaller back then. So I was jumping around on the trampolines, right, with way too small pants and showing like things that I was not supposed to be showing, right?
Well, like backflips. Oh,
like jumping around with my ass crack showing, and everyone. And oh man,
this is this stream PG-13?
We're getting to the point where I want to find out the point where he hurt himself.
Yeah. Okay. So I was jumping around and like, and also I was having a cold, right? So I was having trouble breathing. So I was like jumping around, like being like this, sounding like this old man, like having trouble breathing. I'm like, oh, I gotta get out of this trampoline, right? And I was just taking a step, and I was just gonna take one step and kind of like leave the trampoline, and I stepped on the right. I was on this like 1 meter from the ground, and I stepped down, and I thought it was solid ground, but it wasn't. So I went straight through and hit something under whatever that was, and you could imagine the look. Right, I was laying there in like severe pain with super small pants, and kids were like jumping around and like could somebody like, is there like could somebody like help me perhaps, you know? And my fiance like sees me, and she's like, oh my god, she's like embarrassed, like almost didn't really want to walk over there. She's like, took a while, then she comes over and she's like, could you perhaps sit up? I'm like, I can't move. Like, you should probably get somebody. And there's this like 16-year-old that works there. Like, like what? Like, he can't help me, right? So I'm not gonna like crawling over to. Oh my god, that was crazy. Yeah, that was fun. I really do not wish. I really hope that.
You know, if anybody asks you next time how this happened, say you did a backflip. Or like,
yeah, no, like I was thinking,
you did like a triple flip.
Yeah,
you tried to land on your hands, but you know,
yeah, like I really do not hope.
Or you did it trying to save a cat on the road.
That's what I'm thinking. Like, people ask me, "Oh, how did you break your foot?" Like, well, actually, I was trying to save this old lady for a fire, and I fell down the stairs. Yeah. And so I really hope there's no video of me, because that's gonna destroy my career.
You know what? You know what? Just for the banter, I would have loved just to have that video, just so I could just. It would be so funny just to watch it.
Yeah, I bet it would be. Quite traumatic as well.
What happened to the spandex? Because did the doctors cut off the 15-year-old spandex?
What happened with that? No, that we have. No, they stayed on. But then, like, the funny thing, well, not very funny, but I was in the ER, right, and I got kind of like heavy medications, right. So when I left the ER, I was feeling pretty good, you know, like didn't really have a lot of pain, like feeling pretty good. But they didn't give me any medication on my way home. So I went from the ER to the hotel without any medication. So when the medication started wearing off, obviously that was when it started hurting like hell, and I stayed awake all that night. You know, that was a bit of a miss. But that's yeah, shit happens. It happens.
Gosh, we're getting too old for this. You know, jumping on trampolines. You know,
I think I'm used. Well, I did think that I was way more flexible than I was. Like, I do see myself as like, I thought I was way younger than I actually was. But the thing is, like, if you're gonna be sitting at your desk for years trading, yeah, Shouldn't be just go straight for the trampolines, you know? Gotta warm
But
up.
then again, it sounds like it wasn't about the flexibility that you were supposedly lacking, but it was more
I'm not lacking
of an
flexibility. I'm just
accident.
kidding. I'm very flexible.
No, but I mean it's an accident because your food went through somewhere it wasn't supposed to go through, and perhaps that could have happened to anyone at any age.
I'm thinking about perhaps suing the place, right? Because like they had like yeah, I know I'm that old, right? I'm gonna call them up. But the thing is, like, they had signs on certain areas of the trampoline, like you should not be stepping here, right? Like there's a big sign saying like do not step here. But on that particular place, it didn't have any signs. I thought this is just part of the floor.
Exactly.
So yeah. So yeah,
I think
I'll
it doesn't
say,
have anything to do with you or your age or your flexibility or anything about you. Maybe it's about the occasion or the circumstances where, it's an accident.
yeah, definitely. I mean, yeah, definitely an accident. So it wasn't. I mean, if you saw me jumping around there, you would probably think like, that dude should probably not be there. But still, yeah, definitely. Yeah, exactly. What if? But the thing is, after this happened, I heard from other people that exactly the same thing has happened in the past, where people have broken their feed by doing the exactly the same thing. So I've actually been going through their policy, like their booking policy, and I don't see anywhere where I've actually removed my own, like, so they haven't removed their own responsibility basically from the agreement. They don't really have a good agreement, so I'm gonna look into it. I'm gonna perhaps look into if this were like, if this was America, I would be making a lot of money right now. Yeah.
No, I think, but even not only considering your personal interest, it's in the public interest that whatever situation that is hazardous for the user that gets corrected. Because if it happened before and it happened to you, it's likely to happen again sometime in the future, and we want to be saving more fractures for future users as well.
Yeah, I mean, I'm most likely not gonna sue them. I don't really care about that. But what happened was they called me up the day after and like asked how it's going and everything, and I told them like I broke the foot because of this and that, and I told them like, you're gonna get that fixed, you're gonna have a sign up or like color it with like warning signs or whatever, because it's seriously dangerous. But okay, so this is not a trampoline live stream, but I did have something that I wanted to share, and the reason why I was a bit quiet was because the pain kind of goes up and down, so it's difficult to focus for 2 hours straight. But I do have something interesting here that I want to show you here on the S&P 500. So remember that I talked about how a lot of times the way you want to trade this is if the move would just continue straight up and you would not see a pullback on the low time frames and would just continue straight up, then there is an edge of looking at Bitcoin as a lagging behind the S&P 500. But a lot of times you'll see that the initial move is a lot of times the fake move, right? So you will see the initial move going up, and then you'll retrace parts of that move. And what I like to do in that stage is I'd like to look at where is the closest support level that broke because of the news. So we have 2 levels that interest me. This one, but more importantly, I really like that level right there. And if we add the fib from the low of the news move to the high of the news move, we will see this the 618 comes in with perfect confluence of that first level. So that to me is a very, very good entry if the news was bullish for the S&P 500. So the news that we just got out that we had, I haven't digested that news. I don't really know what it meant for the S&P 500, but obviously looking at this was obviously quite bullish. So if the news is bullish and you're thinking price should continue higher, you still have the idea that after news move like this, prices will almost always retrace parts of the move before continuing in whatever direction that news is telling you. And in this case, that would have just been a fantastic entry. Now, I didn't take this trade because I don't really feel very focused today to be trading. But if I would look for an entry based on this, then that would have been the perfect level for me. So yeah, I just wanted to show you how when you have a next news event, you might want to be looking at a similar idea. This is very true when it comes to the FOMC and NFP and things like that as well.
Nice. I like that. I like that a lot. How you use the flipped support resistance area, and you're combining it with fib retracement or fib levels with the news, with the information of the news. So you're combining everything we have, or not everything, but many different kind of information that to make one story clear. And I think those setups are when you have multiple things of different kind of information telling you the same together, telling you the same thing. I think that you can get some powerful moves coming out of them.
Victor, Alex, is it okay if you take the last 15 minutes? I kind of gotta move around. I can't be sitting for too long with this foot. I gotta kind of like.
No,
something.
mate, it's not allowed. You weren't here.
Yeah, but I gotta leave. You'll take the last 15 minutes, and then guys, tomorrow we're gonna have Anastasia on, and we have a huge announcement in regards to Anastasia. That's definitely something that you do not want to miss. So make sure you get here tomorrow, same time. We're gonna have Anastasia on. She's gonna talk about 3 of her favorite assets that she's trading. It's Euro USD, GBP USD, and oil. And oil has had a massive move lately. So that's definitely something we want to make sure we check out. I'll be back tomorrow. You guys are also, one of you are going to be back tomorrow?
Yeah, I'm probably not going to be. Maybe it depends. Depends what's going on. I'm going to try and come in as often as possible because
we miss you. Everyone miss you.
Yeah, I like being in front of the market.
Yeah, that's it. You don't like being with us. You actually like just being you're trading. So why not just pull up the camera? All right, guys. See you guys tomorrow.
Anyway,
take care, Jonatan.
Bye.
Get well soon. Bye. All right. So there is. Let me put my screen on. There is something I was wanting to do, which is on gold. We wanted to go to the lower time frames. Did you see everything you wanted to see on the lower time frames, Alex?
I did indeed. Yeah.
Okay, so then I'm going to go back to the higher time frames to put things into perspective. Always when at least personally, that's something that it's a personal habit. It's because, of course, we do top-down analysis, but I like to start from the higher time frames, and I try to not go to the 1 minute right away because in the past, it doesn't happen to me anymore, but it was something that did happen a couple of times, times too many, a long time ago, where I would, just go to the lower time frame and I would see something that excites me that I think, okay, this is what I should be trading. And I make the error not to check those higher time frames. And from that moment, that period, I always start from the higher time frames before I go to lower time frames when I'm thinking or looking for a setup. If I already have everything done, then of course I don't need the higher time frames anymore. I have my analysis done. I can go straight to the 1 minute, of course. But let's look at gold from the higher time frames. We don't have anything specific on the monthly time frame. Nothing, no fresh order block, no quasis, no Quasimodos. What we have on the weekly, we've come from a weekly time frame, fresh order block that was retested in that candle. Let me get this out of the way to make it a little bit bigger. And then where is price likely to stop or at least pause when it starts and moves out away from a weekly order block? It's at least the same time frame an opposing structure in the same time frame, meaning if it's going long, or if it's moving away to the upside from a weekly bullish structure, then it's likely to at least go interact with the opposing weekly structure again, right? That's the relevant time frame, right? So it makes sense that it is at this area, and that's the next stoplight. I would like to say stoplight, right? That's the next intersection where it decides, do I continue higher, right, breaking that bearish structure, or do I retrace back into, does the bearish structure stop price and change its direction? That is the question I think that the weekly time frame is posing for us, and the answer lies in the lower time frames, of course. So if we look at this, I understand that I assume I would, the first time around, the first attempt, which already happened, this is an immediate retest. I want to be a buyer here, and I want to be a seller on the bearish structure. It's very, very simple, right? Supply and demand. So on the daily time frame, what is the daily telling us? If we look at through the eyes of structures being created, quasis and order blocks, what do we see? We see bullish structure being created on the daily, which is this one, which was not surprisingly created in the weekly bullish structure, right? So you have alignment from the weekly and the daily, and you have another one which hasn't been retested yet on the daily as price moves up. And where does it go, right? It goes to the next unmitigated order block. Where is it likely to go? Not always. The next unmitigated order block in the opposing direction in the relevant time frame, right? We are in the daily, so the relevant time frame is the daily or the weekly, but in this case, the daily. And this order block, right? You can say, okay, well, but this order block has been, this is the next order block above us when it created, and it was moving away from that structure. Let me clean this up. When it was moving out a couple of days ago, right? And you would say, well, this is the first opposing structure in the relevant time frame. But the thing is, this has already been mitigated, has already been touched, also by immediate retest, but as also a complete and first retest not being immediate. That already happened, right? On the second time around, usually the structure is weaker, and it's more likely that the structure will not hold and just continue higher. And that's exactly what happened. So this becomes invalidated. So we have, where does price go? What's the next order block? If the order block that I just deleted, if that's not going to be respected, what is the next one? The next one, of course, is the order block we have above us. What does it do? It gets there, it interacts with it, and it reacts to the downside, right? It's very logical. It doesn't happen this nicely all the time, and actually it doesn't happen even all the time, but this is the most likely thing to happen. The price moves from, it creates an order block, either it goes without retesting it to the next opposing structure in the relevant time frame, or it retests it first and then goes to the opposing structure in the relevant time frame, right? So, and after, what does it do after we get when it gets to the opposing structure, right? It creates a bullish structure again, right? And we're having an immediate retest of that order block in the form of this wick. And you guessed it. So where does price, what can price do here, right? It's not something that we're not predicting price, but what is the likely thing that price does after it creates this order block? Very, very simple, right? We're not using any indicators. I'm not using any volume profile or anything else. Very simple, just price action. What happens when it reaches and taps into this bearish structure above us? Let's look at that. What happens afterwards? It creates this order block, fresh one, and it retests it. After the immediate retest, it can still have another retest, right? Can still have another retest as it moves away if it hasn't reached this order block yet. But as you can see below us, this order block, this bullish order block, hasn't been retested yet. So to me, that would be if I look for a short, and we have reasons to look for a short on the lower time frame, I would be targeting that lower order block here, right? I moved it, which I shouldn't. That's the target to me. That's what, if the market is going to go lower, that's the first target the market will have. Okay, so I want to have my TP in relation to that structure. Then I go, now that we have a daily bullish, bearish order block being retested. I want to go to the lower time frame to see if I can find some structures to go short on that. Look for a short, and this is something we had yesterday. We talked about yesterday. There isn't a structure, right? The next neckline is all the way down here, right? So there isn't a structure, there isn't a quasi I can use. That's an issue. So I can go short based on a quasi. The next question is, do we have a fresh order block? And we did have a fresh order block yesterday, which was that one, but it's no longer fresh by now. Okay, so well, depending on your rule, it might be still fresh, but we're not retesting that area, so I don't think it's going to. It's not, by the time we get there, it's not going to be fresh anymore for anyone in anyone's book. So to me, my analysis stops there, right? So I can't look for a structure, a short, if I don't see the break of structure on the H4. However, the general idea that we might be, going lower is still valid. It's just that I wouldn't be able to find an entry there, not based on my, strict rules. But if we go to the lower time frames, you can see how the market, after it creates that order block, it goes back and interact with the lower border of that daily order block, and then moves away from it. Watch this order flow. I mean, isn't it obvious, right? There is an order block here on the H2. Look at that. Look at that H2 order block being respected so nicely. What does price do? It gets there, forms a bearish order block, another bearish order block, another bearish order block. And this even is possibly to close as a outside bar, right? That is the market screaming, sellers are coming in, sellers are coming in. It's very clear that the market wants to go lower from this area. Will it actually happen? We don't know, but it's clearly telling us it wants to go lower. So it is likely that it is going to go lower. And if you combine that information, okay, so that means that we could be looking for from this area to look for a short, right? Look a short from there. How do we do that? We go to the lower time frames and look for a quasi or any other reversal pattern, and to find a good area to enter. Let's see if we can actually let me look at the H4. Are we close? No, we're not close at forming an outside bar on the H4. Let me mark this low, because that becomes relevant in about 3 minutes, right? That's going to be, if it closes below this, it's going to be an outside bar on the H2, meaning selling pressure will keep on coming in. Let's go to the 5 minute. Right, and if we take the highest point and assume that is the quasi, the head of the quasi, that means that this is then the neckline. All right, in that case, right, we take all the way lower. Can we find in that range structures that, well, because of the news that the structure is quite wide, which would be then this entry order block. But I would be looking for, I wouldn't be able to do anything else here because it's quite wide, but I would be looking for signs or new structures, new bearish structures being formed, or reversal patterns being formed in this area on the 5 minute. And maybe we can even go to the lower time frame to see if there's anything else on different time frames that might give us that idea of where price can possibly use for its continuation to the downside, right? So this idea is based on that daily bearish order block that we're being retested right now, the news that has since the news we have broken and continue lower, and also the H2 that if it closes in 2 minutes below this yellow line will indicate we'll have formed a bearish order outside bar. All of that telling us that it's likely to go down, but where do we go down from? That's the question. And actually this area is a bit wider. That is one of the areas on the 1 minute I want to see how price reacts to this structure. And that will give me an idea. Do we want to go short or not? Do I want to go short? And it will be something I'll need to have my stop on the other side of that structure and targeting, of course, the daily we have below, which is something like that. It will be something in this range that makes sense to me. And that's a huge, as you can see, a huge nice trade of 1 to 14.6. That was what I wanted to show you guys on gold, that opportunity, because even though it doesn't fit my strategy completely, it does offer some great opportunities for the market to go much lower and you with a short, of course. All right, so we have, let's look at, how's your trade going on EU, Alex?
Yeah, it's funny because I've got it on two. I've got another chart open, another platform open. I've been in this trade for a lot longer. This one didn't actually get stopped out, and it's. I'll show you the analysis as well that I've got on this one. That looked really just looked like it's really keeping in line with this. Let's have a look. This really nice kind of like trend line that I've got on here as well. It's just really nice break retested of the trend line and the EMAs as well, and found a nice little bit of momentum. So I'm still in on both accounts, which is really nice.
Good. Yeah, it looks very strong.
I think with gold as well, that's funny because we can see with gold, I can see that there could be potential for a push higher on gold. Obviously, okay. This is on a daily. I know you've gone through a short example, but on a 4 hour, I really see that we've had this push up. We're starting to make some bullish type of structure. We've had this, this first reaction. We've had a really slow reaction back down into the last area of demand, and now we're seeing another reaction off here as well. So I actually think this has potential to go a lot higher. I would, a really nice trade would just be ready for the break of this higher high. It may be into this area here, but that would be my long idea, to be honest. For me, yeah, going like it wants to go long to the top of this this overall range that you have here.
Yeah, it totally. I agree with you. If we look at the daily, we are coming from a bullish structures being created. Let me show my screen a little bit. I was looking for that short, but of course, the order flow on the daily time frame was long, right? Here we have the daily order block being created at a weekly order block, both of them bullish to its alignment. You have the second one created, and then it goes to the opposing structure, right? And yes, I can't see a reaction from a move down because it reacted on a opposing structure, but gold overall, long-term, higher time frame is bullish. It means that it will break those bearish structures eventually, most likely, and continue to go higher. And if that happens, then of course you want to be long. And personally, I would have wanted to be long from that area, right? When we're retesting from a demand zone. So I'm right here, although we could go longer, I would want to see a bullish engulfing on H4 for me to buy, as it is fresh. I want to be buying. Let's say it could happen right now, like so, right? This could be a bullish structure that perhaps tomorrow will get retested, and if so, then I can buy along into that, take a position long, because I do think we're coming from a bullish momentum, which possibly could continue, right? So we always have two sides of the market, right? It can go up or down. At the same time, the possibility of both of them can frame a profitable trade from both sides, even at the same time on the same day, right? Going short and long, as it is going to the bearish structures, and it comes back to those bullish structures below us. But great stuff. I like that. I'm not there yet to go long gold, especially also because of that move. Look at that move on the H4, that impulsive move tells me that possibly that impulsive move hasn't finished yet, but who knows? We'll have to see how this week continues.
Yeah, it looks like it's really finding some really nice momentum. Euro dollars found some really nice momentum now as well. That kind of that coiling structure, just like if you saw that on, let's say, an equity or a cryptocurrency, you would look at that as like a reaccumulation type of range, and that is basically how you would trade it as well. Prematurely getting in where I got in earlier, was that the right or wrong thing? I don't know, but it really does look like a super textbook trade when you look at it in hindsight. When you look at it in hindsight, it really looks textbook. When you're looking at it from this part, it's like you don't really, it's a little bit more risky, but everything looks better in hindsight.
And actually, it looks very nice. What time frame is that? Let me set on
this is 5 minutes.
5 minutes, yeah. What you're seeing is very simple, right? Very simple. Not to. Let me switch for a little while to my chart. What I'm seeing there is we have an uptrend, an impulsive move, and consolidation. And in that consolidation, we have lower highs being made, but the lowest low are not being made, meaning that's accumulation for another push up, right? The buyers are not allowing lower lows being put in, but the sellers are less, or the sellers are coming in and less likely to push price much lower, meaning they're losing grip on the market, losing grip as they are reaching that downward trend line until it breaks out and it's clear that they lost grip, and it's a buyer's market and it keeps on going higher. So it looks quite clear from a market structure point of view.
Yeah, it just needs to, keep pushing because it can change anytime. It can change absolutely any time. But yeah, Menachem, I was going to be in the UK, I think in February, but this year we definitely want to do some meetups, some actual like 5ers meetups. I'm actually going for just to visit family in February, but we will do some 5ers meetups, and we'll get a good group of people. I know the Scruffy Trader, Gary Langley, is doing a meetup in February. But yeah, we'll hopefully get something together, and we'll hopefully get a lot of people together as well from the community, and we can go for some food or maybe do some live trading together somewhere.
Yeah, that would be fun. On that note, I think we are at the end of our show for today. I would like to thank everyone, especially Alex. And actually, we need a round of applause for Jonatan, because he is, with a fractured ankle, and probably, although he puts a strong face to us, but I'm sure he is in at least some kind of pain because of that fresh fracture, not fresh order block, fresh fracture. So I think he deserves a loud round of applause for caring so much about people in the audience for, showing up even under these circumstances. So on that note, I would like to thank, or
he's actually faking it because he doesn't want to do any house chores. Maybe, you never know.
Let's not say it loud so his fiance doesn't hear us.
Big round of applause.
Yeah, I think he's a true trader, and he cares a lot about the people in the audience, and it shows every time that there is an ancient saying that says, you will know the trees by its fruits, right? And this is one of those things. You can see that we, the 5ers, we care about you. How do you say, honestly, we want for you to progress and become a better trader. And how do we reach that? How do we reach that goal? It's by caring, by doing everything we can to help you. And that's I think what I see in Jonatan as well. So
I think on a personal level, I just want to add to that, Victor, because it's a massive point.
Sure.
I think on a personal level, each one of us really enjoys coming in and spending time with other people that also understand what it's like to be a trader. Because I tell you what, as soon as somebody hears that you're a trader, it goes into the whole thing, you're doing this, you're doing that, it's gambling, and not a lot of people understand how much time and how much effort you have to put in to even find moderate success, or even find a little bit, even to get to break even. So each one of us want to thank you guys as well for being here. I always see the same names here all the time, and it's really good to have you guys in the community. And we'll see you next time.
Great stuff, Alex. On that note, thank you all, and I invite you all to come to our show tomorrow, same place, same time. I will be here, and I hope you will too. Take care. Bye-bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here at The 5ers. We'll see you in the next one.